Hey everyone, Roku reported fourth quarter and full year 2023 results that sent the stock price crashing. So in this video, I'm going to review those earnings results. I'm also going to update my recommendation for Roku stock. Coming into this quarterly update, I did not have Roku stock rated as a buy. I had it rated as a hold and wait and see. So in this video, I will update that recommendation. You'll know if I'm upgrading, downgrading, or keeping Roku stock where it was coming in. So without further ado, let's take a look at these earnings results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one interesting thing I will highlight is when there is this big of a stock price crash following an earnings announcement, I'm usually able to tell really quickly why the stock price fell so much. I can identify it in relatively few minutes. But for Roku, I looked at the entire shareholder letter and I couldn't identify the reason the stock price fell so much. I mean, there was a few things that I looked at that I was like, oh yeah, maybe that wasn't great, or this isn't great, or a few instances where, as a shareholder, I wouldn't be thrilled, but I didn't see anything to highlight a stock price crash the way Roku's price crashed following the earnings release. I mean, if you look at the Roku stock price crash, February 15, that's when they announced earnings after the market closed. It was trading at around $93, $92 a share, and it fell close to $78 a share. So a roughly 15 to 20% stock price decrease, and it kept falling. It's now down to $72 per share. So I'm a little bit surprised at the magnitude of this sell-off, given what I've seen so far in Roku's earnings results. Now, I'll admit I've got more to work through from Roku's earnings results. I've only looked at the shareholder letter for now. Maybe there was something that came out in the conference call that was really, really bad that sent the stock price down, but that's usually rarely the case, where if there's something of that magnitude, that management wouldn't include it in the shareholder letter. So that being said, let's go through these results. So for 2023, management said that they achieved positive adjusted EBITDA and free cash flow a year ahead of schedule. Good news. From this position of improved operational efficiency, we're focusing more of our management attention in 2024 on innovation and growth. And I'm happy to see that. I would like more innovation from Roku. I feel they haven't delivered very much innovation in the last couple of years. Their business has been sort of stagnant. And so we're going to see something new that's coming out from Roku. I have mixed feelings about it though, so I'll talk a little bit more about that a little later. Active accounts of 80 million was up by 10 million from 2022. So solid increase in active accounts, 10 million increase. Remember, this was the strategy from Roku management back when inflation really started to take hold in mid 2022. Management said, we're not going to raise prices. We're going to keep prices flat and we'll absorb the higher cost. And that's hurt Roku's gross profit margin in the player segment, but that's led to an increase in active accounts of 10 million. So at least it had the desired effect. They absorbed those costs, and at least it had the desired effect of adding 10 million accounts. If they didn't increase accounts while keeping costs flat and absorbing higher expense, I would have been much more disappointed with Roku management, but this seems to have been a prudent decision in not increasing prices on their players. Average revenue per user of $39.92 was down 4% year over year. Not great, but this part of Roku's business has been challenged. The ad market has been challenged for Roku, given the changes in consumer behavior, given the drawdown. Remember, since economic reopening gained momentum, people are spending more time and money away from home, and that's meant less time on the Roku platform. As my alarm goes off during the video, sorry about that. So moving on, one thing I will highlight here is Roku reports their business in two different segments, platform and devices. Platform is what you're doing when you're actually in the Roku ecosystem already. Either you've bought a Roku enabled TV or you've bought one of Roku's devices that gives you access to the platform, and that's the platform revenue segment. That segment is much more profitable than the device segment, which is negative. Gross profit is negative in the device segment. Roku is okay with that because they want to get you in their ecosystem, and then they'll make revenue and profit from you much more lucratively. You could see the platform gross profit margin is, roughly around 50%, sometimes more, sometimes less, depending on the quarter, but much better than the negative 13% in the device segment. Although profitability in the device segment did improve from negative 32% to negative 13%, that was solid for Roku, the device's gross profit. That means they're getting their units into people's hands and it's costing them less money. That's good. During the earlier stages of the pandemic, this segment was profitable given how strong demand was. Another thing that was impressive, while Roku delivered revenue growth in the quarter, right? Total net revenue increased 14%. They did that while decreasing expenses meaningfully decreasing expenses. Research and development was down 17% in the quarter. Sales and marketing was down 11%, and general and admin was down 2%. I would like to see more decrease in spending in general and administrative and less from research and development, but now I'm being picky. Still, it's impressive when a company increases revenue while decreasing costs. That's impressive. It's always easier to raise your revenue if you spend more money on research and development, spend more money on sales and marketing. It's easier to grow revenue. The forecast is also not so bad. Q1 revenue of $850 million is solid growth year over year. Total gross profit of $370 million is solid growth year over year. And adjusted EBITDA of flat is also improved year over year as well. You can look at adjusted EBITDA in the first quarter of 2023, adjusted EBITDA was negative 69.1 million. So what management is saying is in the first quarter of 2024, it's going to be flat. So from negative 69 to flat. That's an improvement. That's not so bad. So management saying we were pleased with our net adds despite overall TV units being down in the US in Q4 due to LCD panel prices that increased, leading to smaller TV price discounts for consumers. So you can understand during Black Friday why you didn't find very many TV price discounts is because LCD panel prices increased. So manufacturers couldn't give you the price discounts. But Roku operating system was the number one selling TV in the US for the 5th year in a row. It was number one selling TV in Canada and Mexico. So Roku's operating system is the best in the US, the best in Canada, the best in Mexico, and they're expanding in more markets. I wouldn't be surprised if it proves to be the best in nearly every market worldwide. Well, that might be a stretch. That might be a speculation there. I wouldn't be surprised if Roku's operating system was the best in many, many markets worldwide. The TV operating systems I've tried in the US, Roku is by far the best, right? I've tried Roku, I've tried the Sony system, I've tried the LG and others. They're all, besides Roku, the rest are really buggy. They don't work very well, and I'm disappointed in them overall, right? Whereas with the Roku unit, I'm overall pleased with how it works. It just works. It doesn't get in the way of your viewing experience, which is what I like from an operating system. I don't want to notice it. Whereas with the LG especially, I notice it because it gets in the way of my viewing experience. It does things that I don't appreciate, and it makes my viewing experience less fun. And Roku doesn't. So I'm not surprised they're the best in the US, Canada, and Mexico. So here's what I've been paying close attention to lately is that Roku launched branded TVs designed, made, and sold by Roku. So it now entered into the TV manufacturing business. That's something that I was looking out for. I wanted to see more results from this. It was a little bit absent in this report. So they entered into the market in early 2023 exclusively at Best Buy. And then now they recently expanded to Costco and Amazon. Now, they're going to launch a 4K QLED display with enhanced audio technology called their Pro Series. They'll be available in the US this spring in the 55, 65, and 75-inch sizes, the three most popular sizes, with retail prices under $1,500. The price and availability, the characteristics looks attractive for now, but we need to see more data. One thing I will note here, the important thing to remember is by making this move into manufacturing TVs, designing manufacturing TVs, Roku instantly becomes a more risky stock. Instantly becomes a more risky stock because it needs to make capital investments. It needs to spend more now on inventory, needs to spend more on manufacturing facilities in order to offer this to customers from themselves, not outsourcing, not partnering, not licensing, right? Outright bringing this technology, bringing this capability in-house. So it becomes a more risky investment. That said, it also increases the upside. So the risk versus reward becomes more extreme. It becomes more riskier with also higher potential reward. And that's why I was looking for more information from this segment. It's been a year. I was looking for some data on the TV segment. This is the area where I said, I can understand a little disappointment, but I don't think this was enough, the lack of information, to cause the stock price to fall as much as it did. So overall, to update my recommendation for Roku stock, let's look at the valuation. It's now trading at a price to free cash flow of 58.8, which is still too expensive for me to recommend this stock as a buy. Although I will say it made improvement. It made improvement from where it was coming into the quarter. Coming into the quarter, I had it rated as a hold. After these quarterly results, I've moved it closer to the borderline. And I wouldn't be surprised if they make another quarterly progress like the one they made here. I wouldn't be surprised if by the end of the year, I upgrade Roku stock to a buy. For now, I'm not upgrading though. I'm just highlighting that they did make progress and the valuation improved now with the stock price decrease. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button and I'll see you again soon.